Hello everyone, George DeSantis here with what I would call a midweek follow-up to the look at the market from the past weekend. In doing a little research today, what I noticed is that head and shoulder pattern that others have been talking about as well. And I took a good look at it and I would like to show it to you and discuss it. And in other words, it's a reason to be cautious at this time, although we are having a nice day. Right now, as I speak, the Dow is up 403 points, S&P up 42, and it's quite possible that this might result in a nice big rally, but I want to show you where the caution lies. So let's bring up the chart. So here's a daily chart of the S&P 500, which I made some notations on. And I'd like to show you this head and shoulder pattern. For those of you not familiar with it, if you can get a hold of John Murphy's book, Technical Analysis of the Futures Market, or any of his books really, on that book, you would see the pattern described from page 107. So looking at the chart, what you can see I did here was I did the Fibonacci retracements from the low of December, December 24th, all the way up to the September, I think it is, no, the May high, this high here. And we see the Fibonacci retracements on these dotted lines. So you can see the 38.2, the 50%, the 61.8% retracements. All right, so now let's look at the candlestick patterns. We can see here that the market rallied up here to form this first left shoulder, came back down to this point B, and then rallied up to C, which is the head of the whole pattern. Since we were at C, we started to go into distribution phase, and we came all the way down to this point D. Rallied up but didn't get past this high, so we're making a lower high here at point E, which is the right shoulder. Price then came all the way back down and is now sitting at and then it sat at the neckline for a while. It found some support there, but now it broke through the neckline, this magenta line, and it went all the way down, almost as we saw on the weekend, almost to the 38.2 retracement on the Fibonacci retracement level. So it was that was a level of 27.3023. So what we have today now is a rally up here, but the question becomes, are we going to break the neckline, or are we going to do this return move, which is classic in the head and shoulder, find resistance at this trend line here? So that means we'll be making an even lower low, a lower high, right? And then we come all the way back down, completing this return move at G. So that's where the key factor is. Do we find resistance here, and do we come back down and make even lower lows? And that lower low would be a target of 26.46, somewhere around there. And notice again that target is almost smack on the 50% Fibonacci retracement level. Pretty uncanny. As you can see then in this area here, this box here, I just entered the numbers for the head, the neckline, the difference between them, 154 points. And the way you calculate the target is very simply subtracting 154 from the 2800 neckline. It's approximately 2800, and you get this target of 26.46, I believe. Yeah. So there we are. So I would say the key takeaway here is keep an eye on 2800. It's or thereabouts, 2800 to 2810, because that's where the neckline is. If we can't get past that and we meet a lot of resistance there, look for more downside with a target of about 26.46. Of course, we could break to the upside of break above the neckline. But these head and shoulder patterns, although some people are not too fond of them, they tend to hold up pretty often, you know. So keep that in mind. I'm not going all in yet, because if it's going to come back here, I'm going to wait for better buying opportunity. So we don't know. We just, you know, these are all hypotheticals, and we can just go on the basis of what has happened before with these head and shoulder patterns. I'm betting that we might find resistance here. We're going to find resistance right here. Look at this night. Look at this trend line here. We can't make higher highs. We're making lower highs here, lower highs. So we'll keep an eye on that. That's basically what I wanted to point out in this video. It's only a 5-minute video, so have fun and keep an eye on it. It's a caution flag, that's all. You know, we could break the neckline and go much higher. We'll see. Have a good day. Make some money.